Morning viewers, and welcome to the channel. My name is Shannon Rivkin. Subject of this week's video: with a takeover approach from Blackstone following the Victorian Royal Commission's findings, is this just the beginning? Yeah, it seemed a certainty that we were going to see action on Crown heat up pretty quickly. We saw earlier this year, of course, significant takeover interest as I guess the vultures circled following Crown's issues with regulators in New South Wales, Victoria, and Perth, and Western Australia. But of course, as that takeover interest came from 3 or 4 different parties, but as the Victorian Royal Commission got underway and the New South Wales Royal Commission was pretty atrocious, that takeover interest fell away, and then we were in this kind of holding period while the market waited and hoped for what was eventuated to not be that bad an outcome for Crown shareholders. I say, and this is not to say that Crown, and certainly, I should say, the board and certain people involved shouldn't have maybe seen a bigger punishment. But to some degree, you almost have to say that Crown, at least in Victoria, is almost too big to fail. And I hate using that expression, but the logistical reality of how removing the license or taking the license away from Crown was going to look was just not feasible. Crown has is the only operator of that business. It's not like the government can simply say you're no longer able to run a casino, so we're going to install someone else, and they're going to take over that gaming floor. That is Crown's business. That they own the property. They have. They're the only ones who really can run that, and of course, they, as I understand it, the biggest employer in Victoria. So, while setting a good example and setting a precedent is important, it just wasn't going to, I think, happen. I think anyone who was predicting doomsday was not being realistic. So, seeing what the Royal Commission found, that's all pretty much slaps on the wrist, and now I guess therefore makes it a far more comfortable opportunity for a bidder such as Blackstone, who can come in and say, well, world's reopening, Asia is the Asian market for gaming assets is going to recover strongly. The Australian casinos remain some of the best assets, both in the region and the world, and we're buying them at a huge discount because, of course, they've been exposed to this very damaging Royal Commission, as well as, of course, the pandemic. So while historically you'd say a price of $12.50 or $70, I think it's $12.75 is the offer now, isn't probably a great price historically. Compared to recent trading levels, it's clearly going to get at least a look at from the board. I expect goal here will be to rustle up other bidding interest, and that I think there will be other names taking a look. A few years ago we saw Wynn express interest. Oak Trees tried to look at a restructuring, and even more recently, Star Group, who are now of course facing their own issues with regulators, were trying to push a merger of equals, and at least as a Crown shareholder, I think that one made a lot of sense, because while you weren't getting a big cash premium, accepting that the price on offer today is not significant. You obviously could have rode the wave of a recovery, and there'd be significant synergies in joining the businesses as well. But Blackstone undoubtedly is the lowest risk opportunity for the Crown board here. They're already, I think, pretty far ahead as far as probity goes, because they've made their applications earlier in the year. They are already, of course, a shareholder in Crown, I think, with a 10% stake after buying, I think, that stake in 2018 at significantly lower levels. And ultimately, I think they will probably come out on top, whether it's a higher price than now than the one on offer. Hard to say, but as far as whether there's an opportunity to buy here and make more money, probably there is. But I would say, as far as takeover opportunities go, it isn't the most exciting one I've ever seen. I should have gone to this next page just to show you the offer from Blackstone. Sorry, it is $12.50, not $12.75. I guess that was wishful thinking for Crown shareholders. But the issue here is, I think this is going to take some time. This is going to be a far longer process than is typical with other takeovers, and I think the opportunity is possibly elsewhere. So, you know, these are the Crown hybrids, which we have had some exposure to. They pay higher interest than, you know, pretty much all other hybrids on offer on the ASX at the moment, and importantly as well, offer capital upside if we do see a takeover. So these, you know, this almost follows the chart of Crown, which is when this, you know, the hope of a takeover kind of fell away. The market started to come to the view that a redemption of these hybrids, because the first call date had passed, was not on the cards. But of course, that was a price at which we were very comfortable holding, because we thought the interest would continue to be paid, and it was only a matter of time, knowing the, you know, the reality that Crown was not going to lose its business. It would eventually be able to be in a position where it was, you know, at least saleable, and its balance sheet was in good position as well. So being able to receive interest and eventually get that $100 was pretty good buying in these mid $80 level. But, you know, even at the mid 90s level, you're still looking at a decent distribution yield, and I think a high likelihood that we will see Crown bought eventually, and you'll be paid, of course, $100. It might not be in the immediate short term. It might be a little bit more of a slow burn with less upside, but I think this is a really nice low risk way to play this theme. And you know, I think it's hard to go wrong, really, because worst case scenario, you'll continue to get your interest. Anyway, that's it for this week's video. If you like the video, please click like and subscribe, and I'll be back with a new video next week.